on a record Tuesday, April 23rd, 2019, just after 4:35 p.m. Central Daylight Time. The record being in the S&P and the NASDAQ. Yeah, these markets now, new high closes, cash and futures markets. And yet I'm hearing, as I'm listening to Into the Day, the common word, the breath isn't there. The market's being led by a certain sector, about 6-7 stocks. Okay, I'm still looking at it all. This is still the weakness in the Russell, but it's closing in on its highs finally. And of course, we know the Dow had been behind the 8 ball, but it's coming back. Dollar index not backing off on anything. As we take a look at bonds and notes, a small rally and a further rally today in the energies. And it's getting fairly wild in them. The ranges are getting bigger and bigger in some. We'll see if the market can hold up. But let's go to the chart action. Weekly area chart of closes. The past high close is 29.34. We're 29.38.10 on the weekly chart. That's a new record. And look at how this market has just come from, that's Christmas Eve, my friends, and this market is just not backed off at all. Now, we had talked just yesterday, this was a consolidation pattern, possibly. I don't know if it was or wasn't what it was doing. And today you have to say you got to break out of the consolidation. Now, when I look at the chart, you still have a lower low, higher high, but you've got a new high close. So unless the market pulls back under 2 days ago's low of 28.8950, the bulls have grabbed control. And if you think about it, anyone short the futures contracts under tonight's close within, from the high, 160 points away, which is a 1.5 a handle, if you will, is behind in this market. So the market has caught the bears. When we take a look at what it's done in relation to the 18, the 200-day, the 100-day, markets overall, the averages. Where's the resistance then? Well, it's right above us. The upper Bollinger Band is the resistance, 29.44. Now, you, like others, should be saying, you know, Ira, you've said resistance, and the whole point of a Bollinger Band, the first time you hit it, I'm looking for the market to back off. I am not saying go short, never have. I am saying I will, and I still believe it. I believe those that have gotten long the past few days, wherever that Bollinger Band is, they will take some money off the table. That is the theory that I espouse, and the reason is if you go back and you look at it, you often see it happening, be it to the downside or the upside. It doesn't change that I think the line in the sand is the 18-day average of closes, and when the market is over it, you have a bullish bias, under it a bearish bias. It doesn't change that if the market decides to correct, one of the first spots on the way down could be the 18-day average of closes, and when the market corrects from getting down hard, it often goes and stalls at that 18-day average. You go back and you look yourself, you'll see often that is the case. What is more important to me is the momentum, and I mentioned this the other day, and for those of you that get the newsletters that I put out, I had said that if you don't close near that 2,900 level or lower, and I'm not talking 2,908, I was talking very specific, near 2,900, you can catch this market because it'll turn back potentially, and that's what it's done. And my letter stands as it is, and that's basically what has happened here. So you've still got a market that's moving. Tuesday reversal? Well, let's think about it. Yesterday you were up 2.5 points. Today you're up 25. There is no Tuesday reversal in the market. In the NASDAQ, this has been the stronger of everything. It has kept the embedded reading. It hit the upper Bollinger Band today. Today's high was 78.43.75. 78.38 is the upper Bollinger Band. You closed literally right by that number. In the Dow, you're knocking on the door right at the upper Bollinger Band. So this is the area, that's all I can tell you, where I can see the market having another period where it comes up, stalls out a little bit, and figures out what it wants to do from there. The Russell is still the weakest of the group. It still has the pattern of lower highs, lower lows. It today got itself for the first time in a couple of days now back up and over the 18-day average, and it even cleared the 200-day average. That means this market is starting to eye the all-time highs like the other indices. In the VIX, you didn't fall very much today. So you'll say, as you should, Ira, if you go down to the lower Bollinger Band, do you think that this is still an area where the pros might write puts? And I won't change my opinion. So far as they've written the puts when you have fallen down to this area, they've had enough of a bounce to get back at that 18-day average. The same has happened on the rallies. I won't change it. Can that be a wrong theory from time to time? I don't know anything that's right all the time, but it's still what I'd expect. In the T-bond market, the market's got what we call an embedded reading. Embedded means that you take the momentum index called a slow stochastic indicator, the SSTO, and you put both numbers that make it up to two lines called a K and D sideways under 20. And you've done that, and you have to do it for several days minimum, and this market has met that match. So if the number closes over 20, what you're looking for is price in the 18-day average to make a run at each other. Doesn't mean it has to, but it's what I'd expect. You'd have to take out 146.31 to negate the downtrend of lower highs, lower lows. That would also potentially put the market what? Because you've got today's low of 146.4 higher than 145.34, if that happened, you could set up the swing line higher, but I'd still expect wherever that 18-day average is for the resistance to come in. The reason I'm mentioning that is you never did embed in the 10-year. Only the 30 years has done it. This market and the 5-year have both stayed away. They just got oversold and have turned their momentum to the upside. And if price is following momentum, which you had an outside day up in the market, I wouldn't be surprised to see a challenge of the 18-day average. That does not mean this market's going to turn into a bull trend just yet. It could be the end, and it has signaled an end of what? Well, if we take a look at this high right here, that was 123.07.5. Today's high was 123.06.5. You have to get over that number for me to say, okay, you've changed the pattern of the market. Now all you need to do is close over the 18-day average to join the bull camp. I would then, until that occurs, I still expect resistance at 123.15. TLT has still got the embedded reading. Therefore, rallies that are happening are still bear market rallies. This is the key indicator when it embeds. When it doesn't embed, it can get overbought, oversold, gives you an idea what price is doing. Embedding's the strongest that I know of on the chart. The market, however, on the rally that it had back here, negated the swing line, but it still keeps the bears in control. Frankly, if the market were to take out 122.24, I wouldn't be surprised to see a challenge of the combination of the Bollinger Band 18-day average. Let's assume it doesn't happen and go the other way. Let's assume it clears 123.10. Then why not say the 18-day average is the next objective? If the market loses the embedded reading, I still have that 18-day average as the near-term objective. Now in the dollar index, the first challenge back right there, hit the upper Bollinger Band, corrected, and today you moved on through it. You are overbought. The odds of staying over a Bollinger Band 5% of the time. The market has caught everybody that is short. Like the stock market, you wouldn't think it. The dollar is super strong compared to just about all world currencies, yet corporate earnings are still coming out good. And we're probably going to get a beat as a group, and that's what the market is doing. You're still up on this market, still overbought. Throw the name off a chart. Just go by what you learn over time. Trend up, market ahead of itself in overbought territory and over the upper Bollinger Band. Certainly, in my opinion, not a zone where I expect to see new buying. It doesn't mean it won't happen. And in the eurocurrency, today's break carried right to that lower Bollinger Band. And for all practical purposes, that's where it stopped on the day. It got as low as 1244.50, came back and settled at 112.68. I don't know what I just said, but 112.68. Over that 112.50, 2.5. So the first challenge of the Bollinger Band saw some profit taking. And we hadn't been down to that since back in early March. We haven't challenged that much of a low in the market. In the British pound, fell right down and went through that lower Bollinger Band today. It didn't even stop the market. What had happened prior is you went down to the 100-day average, sort of stalled, went back and challenged it today and back under it. Now the question is, with an oversold market, are the pros going to hang on, or what are they going to do right here? Until today's high is taken out, which was the high of an outside day down, I say the trend is down, take out that high, and I'll look for a challenge of wherever the 18-day average is. In the Japanese yen, the key is, do you lose the embedded reading? Now, I was wondering all day why this market was higher. It appears that the Bank of Japan is telling the regional banks that they're looking hard. This idea of paying dividends regardless of the capital, regardless of the bank's earnings, is now under their scrutiny. It actually makes the bank stronger, but it'll stop people from probably investing in regional banks. Two-edged sword. We'll see if the market can get to the 18-day average and if it keeps its embedded reading. If you take out today's low, which is the low of an outside day up, it's the flip-flop of what we just talked, then I look to see the first support, which is the 89.31 level, which is the lower Bollinger Band. That number will probably climb a bit tonight due to the math of how it's done. In Bitcoin, you converted again the slow stochastic to embedding, meaning that the K and D lines have at least 3 days together over the 80 level. When that occurs, until that red line closes back under 80, I expect to see buying on the breaks. Target could be that upper Bollinger Band level. In the Brent versus WTI, the gains that we saw yesterday, a bit of them given back. This is the differential, and it moved from yesterday being a high of $8.49 back about 20 cents today. Still nothing that's saying the market has peaked out in that. But when you look at Brent, you have the embedded reading. You're hitting the upper Bollinger Band as you did back here. Then you back off. You've been consolidating. We'll see at what number this market can eventually peak out. Some people think 80. Goldman Sachs has been talking 75 is still their zone that they don't see it getting much over. They're getting pretty close to it right now. In WTI, I think today, again, the first challenge of a Bollinger Band is where I think pros take some money off the table. We'll see what they do on the pullbacks. You have the embedded reading, so I'd expect to see buying until that red line closes under the 80 level. Gasoline. As you know, you hit the upper Bollinger Band yesterday. You backed off from it today. You still closed higher on the day, but as you can see, the first challenge, the recent challenge of it, did what we had talked about. That's where I expect to see pros come out. And in nat gas, you were under the band, got back over it, got back under. This is called riding that band. You're just back and forth, just looking for the lower lows. And again, that embedded reading totally at work here, driving prices down. Now, when we start hearing about warm weather, as you hear those first forecasts where air conditioning is really needed, that is probably going to tie together or just before it when this market puts in a low. But as I said, we're at that funny part of the year. It's April 23rd. You generally don't get a lot of heat out east or in the Midwest just yet. Give it another couple of weeks. But the market is a futures. It doesn't wait for the exact date. Just remember that. Trend still to the downside. Now, we write about all this, and we talk about it in just the ways that I'm talking about through our staff here at Linn. Been with this company a long time. I know what goes on in these market letters, and we have different staff that write them. So be a futures trader, an option strategy trader, playing around with hedging needs that you might have, and want to know what the hedgers are doing. In some manner, way, shape, or form, we cover all these markets throughout the day, orally, through our trading platforms, written into your email boxes. Imagine what you're getting all there. And you don't get that from most firms. We really pride ourselves on our research. So if you're a commodity trader looking to see people that write about the research like we do, offering the one-on-hand, one-on-one brokerage, we talk to our customers. People are shocked when I pick up the phone. Yes, we're right there. So how do you get to us? Either call us, go to our website. You'll see a carousel of free offers. Click on what you want there, or click right up here. If you're watching me on YouTube, it'll take you there. I'm Ira Epstein. Exciting times. Talk to you tomorrow.